Well, it's been nearly 3 months since the rollout of the goods and services tax, and industry continues to experience teething trouble. Over the next 30 minutes, we take stock of the impact of the GST on 3 specific sectors: exporters who warn of a cash crunch, the used car industry and the car leasing industry. Good evening, and thanks very much for joining us on the special edition of the GST Sentimeter. I'm Shereen Bhan. But let's start with exporters and the problems they seem to be facing. To take this conversation forward, we're joined by Ajay, Sahai, Director General and CEO of the Federation of Indian Exporters, and tax experts Rohan Shah and MS Mani. But before that, let's go across now to our colleague Rituparna Bhuyan. He will join us with the big breaking story, and that is the first meeting of the Revenue Secretary-led panel on exporters and the woes that they face on account of the GST. We will get you that and more in just a second. But Mr. Sahai, let me come to you, because FIEO in its press release that was put out along with the trade data seemed to suggest that there is severe liquidity problems that exporters are facing at this point in time, and that some exporters, the small and medium exporters, are forcing to say no to orders altogether. Is that accurate? Is it exaggerated?
In fact, it's definitely accurate that a sizable section of small and micro exporters are refusing the order for 2 reasons. First and foremost is that they have the liquidity crunch at their hand. Secondly, they are not clear what would be the refund mechanism which will be in place, because at the moment we have not filed any return. We are not knowing whether 100% of the return will come back to them as a form of refund or there will be a deduction. So there is lack of clarity with regard to the refund which will flow to the micro and small sector. But the basic issue is that they have already paid the taxes for the month of July. Refund is nowhere in sight, and going by the current procedure, one has to wait for refund till the month of December.
Okay. Is this pain being felt in the labour-intensive sectors, gems and jewellery, leather, textiles, etc.? Is that where the maximum pain is being felt, Mr. Sahai?
Definitely, because these are the segment of the products where most of the SMEs are working. So there are not many large companies in these segments, and to that extent what you are saying is correct. These are also the sectors which have not done reasonably well in exports, though of course export for the month of August is showing 10% growth. But if we look into the labor-intensive sectors like gems and jewellery, apparel, textile, leather, they are showing either the modest growth of around 1 to 2%, or they are still in red.
Okay. One quick question before I get Rohan Shah into the conversation. You said that there is uncertainty even about the refunds. Explain to us what the problem seems to be there.
To the export sector only when the GSTR 1, 2 and 3 are filed and proof of export flows from IceGate to the GSTN portal. The date for GSTR 1 has been extended. So even if somebody files the refund application by the 20th of November, there is 15 days time which has been given for issuance of acknowledgement in case of ITC refund. So that takes us to 5th of December. 7 days time is the minimum time which is available for granting 90% of the provisional payment. That takes us to the 2nd week of December. So if the payment is not forthcoming to the export sector for the month of July, August, September and October, for these months exporter has to shell money from their pocket. And most of the small exporter hardly have the wherewithal to pay for the GST without getting the refund.
Okay, let's go across to Rituparna. Ritu, we were just listening to what Mr. Sahai has to say representing FIEO, the liquidity squeeze, the working capital issues, they're being raised by exporters. I understand that tomorrow is going to be the first meeting of the Revenue Secretary-led panel with exporters. Take us through what you know.
From what we have been told by sources, this meeting will be attended by representatives of export promotion organizations like FIEO, as well as officials from the Commerce Ministry, the CBEC, and this panel, which is headed by the Revenue Secretary, will then go through the issues faced by exporters on the GST front. Remember that because of the issues that the GSTN is facing, many of these exporters are not able to get back the refunds that they have that is due to them on account of duties paid on export inputs. As a result, that has resulted in working capital issues. More importantly, Commerce Ministry also is backing up exporters and has been demanding that there should be a mechanism for basically, doing away with this system of refunds and instead go for a mechanism where you do not need to pay any duty on export inputs. Of course, it depends on the Revenue Secretary-led panel now to take or get convinced, and once they get convinced, or if they get convinced, then they will propose this to the GST Council.
All right, Rituparna, appreciate you joining us for that crucial meeting tomorrow. Rohan Shah, as you listen to what our colleague is reporting there on what could be on the agenda tomorrow for the meeting and what you just heard from Mr. Sahai, there is pain that the export sector is faced with. What could be the way out at this point?
The issue which is being faced is twofold. One, I need to pay tax upfront, and then the entire period of time that it needs for me to process the goods and export them, my money is effectively stuck. The second situation is what you've heard, the GST and network, and the dates that you now have are going to delay things to the 5th of December. And the third issue is that there is just very little belief that, that refund will actually come in the time frame that is being promised, just because of the factor that sort of deficit of trust has been there for some time. In terms of what the solution is, we have been hesitating to treat any transactions as exempt because our belief is that the moment we exempt them, the situation is that you will break the chain of credit and you will break the audit trail. Now, what you find is either countries are zero rating, in which case you do not pay any taxes either on consumption or on export, or another approach is to specify separately in our tariff exports and export-related consumption as a specific segment for which we then have a nil rate. So when you have a nil rate, there is no effective tax collection. Hopefully, you will be able to flow through the credit and there is a complete audit trail. So the situation here is, given the severity of the problem, I don't think we will be able to sit there and say that, industry has to suffer this, because all the competing nations, even if they have GST, don't have this sort of a burden on the exporter. So we'll have to take a step, whether it's nil rating, whether it's something else, but the amount of pain this causes and the amount of loss of opportunity both for export and employment, quite clearly we have a very severe issue that they have to deal with right away.
Okay. Mr. Sahai, a quick word on what you just heard there from Rohan Shah on the possibility of, nil rating and whether that will actually alleviate the pain that you're faced with.
No, in fact, whether you go through the nil rating, whether you exempt the sector and put a trail under the GST is one of the same thing. We have two problems. One is about the taxes which has already been paid. We are saying that one solution could be to provide refund based on the GSTR 3 which has already been 3B which has already been filed, where on the consolidated basis you are capturing the export value, the ITC which has been paid and the IGST amount. So one way is could be to refund on the basis of the GSTR 3B, but the way forward, as told by the panelists, could be one of them, or government can look for an upfront exemption, what they have provided to the SCZ.
Rohan Shah, quick comment there on the refund issue that Mr. Sahai just raised, and on balance between nil rating as well as an upfront exemption, which is what I think Mr. Sahai seems to be veering more toward. How would you weigh the government's options?
I think an exemption, is really the basis that is most often used. The issue for us, and I think there is a hesitance at this point in time under GST to offer any form of exemption, because we are just, clear that that breaks the chain in terms of the credit flow through. And in that situation, as I said, your nil rate is the option. If I think you had to see it purely from an exporter perspective, I think they much rather have a set of exemptions. That would be the preference. That is sort of the basis which has also worked earlier. And the other situation is, you had various EXIM-related schemes which gave you exemptions in the context of either inputs or input services which you need. Now, those also have been modified to reflect the GST position. So whether you have the schemes which we call the SEIS or MEIS, all those effectively gave you an exemption upfront on consumption, which has gone. So I think the popular option would be to bring back the exemption. But if not, we have to think of a nil rate or a variation of that.
All right, gentlemen, we will have to take a break, and we will, of course, reconnect with you once that meeting does take place tomorrow. Ajay, Sahai, thanks very much for joining us. When we return, how is the used car industry and the car leasing business coping with the shift to the GST? We're back in 2 with that and more. You're watching the GST Sentimeter.